David R. Guttery is an investment advisory representative of Emeritus Investment Corporation and president of Keystone Financial Group in Trussville, Alabama. Please stay tuned through the end of the video for additional important disclosure information.
Today, I'm joined by David Guttery, president of Keystone Financial Group in Trussville, for a discussion about recent market volatility and keeping it in perspective. Welcome, David.
Thank you for having me.
Thanks for joining us. Wow, in recent weeks, we've seen quite a bit of market volatility, and I'm sure our viewers would like to know what in the world is going on.
Financial advisors remind clients ad nauseum that markets for all securities can be volatile. When we have an extended period of relative calm, sometimes the potential for volatility can fade into the background noise. That is, of course, until we reach a point of inflection, and then we're reminded of just how sharply markets can move. It's not a cliche. Investors should always orient their objectives within parameters of risk, within which they're comfortable. In this case, I believe that we're witnessing a healthy and needed correction within an upwardly trending market. After an historic run of positive monthly market gains, any number of things can become a catalyst that triggers a market correction.
David, can you provide our viewers with some detail about the catalyst behind the correction?
Sure. It's important to understand this in context with how the market has performed since the election. Something historic and precedent-setting occurred in 2017. For the first time in history, we witnessed the market post positive results over all 12 months of the year. Indeed, if you consider the market's performance from November of 2016 through January of 2018, we actually witnessed 15 consecutively positive months for the market. That's never happened before. Consider that after 12 months, short-term gains become taxable as long-term capital gains. So part of the catalyst behind a correction can simply be having a significant gain that has recently become taxable in a much more favorable manner. Other potential catalysts could be concerns over short-term budget spending measures and longer-term legislative issues such as DACA and how that might impact future budget negotiations. It could be President Trump's golf game or the color of Melania's dress. The point is, sometimes amid otherwise solid economic and market fundamentals, any catalyst can set off a correction.
I'm sure that you've probably taken a number of calls from clients recently who have been concerned about this correction. How do you help them to keep times like these in perspective?
Conversations like that present a fantastic opportunity to revisit and reevaluate the assumptions that we've made and the parameters for taking risk relative to their goals. It helps to take a step back and see where we are in context with where we've been and relative to where we're trying to go over the next 10 to 20 years. Also, I remind clients of the difference between the tip of an iceberg and an ice cube. Not every floating object in the water can sink a ship. Economic metrics are solid and they continue to trend higher. These trends confirm that both sides of the economy continue to expand. Housing remains strong. Employment metrics are looking increasingly better, and consumer confidence is at a post-recession high. Indeed, some of these metrics, like the streak of weekly jobless claims below 300,000, hasn't looked this good since 1970. We expect that the full impact of the Tax Cuts and Jobs Act of 2017 remains in front of us, and thus I believe it is likely that we will see these positive economic trends continue to gain momentum. Other market metrics, like the capitalized profit model, suggests that markets remain attractively valued on a relative basis. So when you revisit investment objectives and risk tolerance and assess periods of times like this against the economic environment within which we find ourselves, it becomes easier to discern the iceberg from the ice cube. And I believe that what we're seeing now is the latter of the two.
That sounds like great advice. Do you have any specific suggestions that our viewers might consider at this time?
Yes. Unless you've had a life event that might otherwise alter your objectives, I would suggest staying the course and remaining true to your underlying investment objectives. Reach out to your investment professional and candidly discuss what's on your mind. If that relationship doesn't exist, or if you would just like a second opinion, I would welcome the opportunity to be of service.
Thank you, David. For additional information, David may be reached through the means listed upon the following screen. For the Trussville Tribune, I'm Tana Friday.
David R. Guttery independently offers securities and investment advisory services through Emeritus Investment Corporation, member FINRA and SIPC. AIC and Keystone Financial Group are not affiliated. Additional products and services may be available through David R. Guttery or Keystone Financial Group that are not offered through AIC. Some of the products and concepts discussed have their own cost and are subject to risk, including the possible loss of principal. These costs and risk will be thoroughly discussed with you prior to any recommendation or solicitation. Past performance is no guarantee of future results.